Pharmaniaga is in very serious discussions with the Islamic Development Bank with regards to a COVID-19 vaccine distribution deal for the Organisation of Islamic Cooperation Countries in Africa, according to Group Managing Director Dato' Zulkarnain Mat Yusof. Zulkarnain said the pharmaceutical company has maintained its strategy to expand its COVID-19 vaccine business overseas, particularly to countries in Africa. He explains that Pharmaniaga is in talks with around 15 countries, adding that while Africa currently has a population of 1.2 billion, its vaccination rate remains low, with the number of nations only reaching between 15 and 20%. Zulkarnain highlighted that the reason behind the low vaccination rate of African nations is down to low funding levels, and that Pharmaniaga has been in discussion with IDB to resolve the funding issues for OIC countries on the continent. Zulkarnain says that if this new COVID-19 vaccination distribution deal is secured, Pharmaniaga's revenue in the coming quarters will be comparable to levels seen last year. To recap, last August, Pharmaniaga had shared its plans to expand the COVID-19 vaccine business outside of Malaysia and has thus far successfully secured orders for 20,000 doses from the private sector in Myanmar. Meanwhile, in terms of other expansion strategies, Zulkarnain said Pharmaniaga aims to expand its pharmaceutical market presence to the UK, Turkey, as well as countries in the Middle East and North Africa region, but says that this will take 2 to 3 years to materialize in view of all the necessary red tape. Closer to home, Pharmaniaga's new logistics and distribution concession agreement with the Ministry of Health will be completed by the end of the year, according to Zulkarnain. The current concession agreement with MOH is set to expire by end 2022. The ringgit weakened past 4.41 against a strengthening US dollar on Monday after the US reported last Friday that May 2022 inflation accelerated at a faster than expected month-on-month pace of 1%. Compared with a year earlier, the US inflation, as measured by the Consumer Price Index, rose 8.6%. Such sentiment led to anticipation of more aggressive US interest hikes to fight inflation. As at time of recording, the ringgit depreciated 0.37% to its weakest level for the day and over the last 1 year at 4.4180 against the greenback from the previous close of 4.4015 last Friday. Over the last 1 year, the ringgit has traded at between 4.1125 and 4.4180 against the US dollar, which is strengthening due to demand for the greenback by investors who intend to capitalize on higher returns from their investments in anticipation that the Federal Reserve would hike rates. As at time of recording, the US dollar index, which measures the value of the USD against a basket of foreign currencies, rose 0.36% to 104.519. Meanwhile, the World Bank Group said that the impact of rising interest rates in the US is expected to be less severe for Malaysia compared with other East Asia and Pacific countries due to factors including Malaysia's flexible exchange rate and large international reserves. Bank Islam Malaysia Chief Economist Dr. Muhammad Afzanizam Abdul Rashid said that the ringgit is expected to remain weak on Monday as the Fed's Federal Open Market Committee members will likely maintain a hawkish stance when they meet this week. He told Bernama that the FOMC meeting this week is also crucial because the Fed staff will also share their latest quarterly forecast. Shp Autos net profit for the fourth quarter grew 17.8% year-on-year to 78.7 million, largely due to higher profit contribution from Mazda's domestic operations, plus positive contribution from Peugeot's operations. Revenue soared 40% to 897.36 million, thanks to higher overall sales volume from the group's Mazda, Peugeot and Kia operations as consumers rushed to register vehicles before the expiration of sales tax exemption incentives in June. Shp Auto declared a fourth interim dividend of 2 cents per share as well as a special dividend of 2.5 cents per share, which brings total dividend declared for FY22 to 8.75 cents per share. For the full year, net profit improved by 16.4% to 155.72 million, while top line ticked up to 2.32 billion from 2.29 billion previously. Meanwhile, the group also announced the redesignation of Dato' Lee Kok Chuan as the group CEO effective June 13th. He was was previously Shp Autos Chief Executive Officer. On prospects, the group said it has continued to register encouraging financial results for the current quarter, mainly due to the sales tax exemption and as the country fully opens. Shp Auto, however, cautioned that the current ongoing shortages of chips and components and shipment delay and the continued lockdowns in China will continue to impact recovery. As such, Shp Auto said that the launching of new facelift models of the group's existing marques, namely Mazda, Peugeot and Kia, is still very much dependent on the market sentiments and economic conditions then. Scientex's net profit for the third quarter of FY22 fell 19.6% to 88.3 million due to a mixture of rising raw material prices and higher freight costs. In contrast, quarterly revenue improved slightly to 993.84 million from 976.8 million a year ago, thanks to its packaging segment, which was aided by its export markets and an increase in average selling price. Scientex declared an interim dividend of 4 cents per share. On its prospects, Scientex says that it continues to strengthen and enhance its operation and supply chain efficiencies and expand its capacity in areas of competitive strengths to maintain its competitive edge and manage rising costs. The group says its ongoing capacity and capability expansion plans remain on track, with its new robotic stretch film plant due to be commissioned in the second half of 2022. It will also be innovating in terms of sustainable and value-added products in line with customer needs and market trends. On its property segment, Scientex says that it was affected by slower progress due to labour and material shortages. As such, the division has adopted a cautious approach towards its scheduled new launches, adding that it will continue to leverage on its brand and strategic locations to meet demand for affordable homes. Barring unforeseen developments, Scientex says it remains on track to deliver another profitable performance in this financial year. World Bank Group lead economist from Malaysia, Dr. Apurva Singh, said that the goods and services tax is better than the sales and services tax because the GST broadens the country's tax base and brings in more revenue. He explains that more than 170 countries have adopted some kind of VAT GST system and that such a tax structure is regressive as it is a tax on consumption and 60% of the economy depends on consumption. He was speaking to reporters at a media briefing held in conjunction with the World Bank's June 2022 Malaysia Economic Monitor report publication. Apurva adds that one of the lessons learned from GST 1.0 is for SMEs, especially micro enterprises, to have a sufficient transition period, excluding them initially, and to really streamline and make the whole tax refund process more efficient. To recap, Malaysia announced a GST of 6% beginning April 1st, 2015, before the SST scheme was re-implemented on September 1st, 2018. The Ministry of Finance is looking at introducing the Fiscal Responsibility Act by tabling the bill at the upcoming parliamentary session to boost tax collection, a crucial step that is needed to replenish the nation's coffers. The World Bank similarly said that Malaysia's efforts to rebuild its fiscal buffers through increased revenue collection and enhanced spending efficiency should remain a key policy priority.